There are days in the market that feel heavier than others. Days when the charts aren't just numbers, they're judgments. Days when the world holds its breath waiting for a single piece of data to decide who wins and who loses. CPI, FOMC, non-farm payrolls. These aren't just events, they're emotional earthquakes, and every trader standing in their path faces the same invisible enemy themselves. Because the real risk on these days isn't volatility, it's vulnerability. The battle isn't on the chart, it's in your mind. This is Mind Over Markets, a journey into the psychology of trading, where we explore how discipline is built, how emotion destroys, and how awareness turns chaos into clarity. In this episode, we dive into event day risk, how to manage your fear, control your impulses, and master the storm that begins long before the numbers drop. So take a breath, quiet your thoughts, because the lesson begins the moment you stop trying to control the market and start learning how to control yourself. You wake up earlier than usual. The room is quiet, but your mind isn't. Today's not an ordinary trading day, it's CPI day, or maybe FOMC, or non-farm payrolls. Whatever the event is, you can feel it. Your heart beats a little faster. You scroll through Twitter news feeds, analysts' takes. Everyone has an opinion. Everyone is ready for the move. And deep down, you want to be ready too. But there's a problem. Event days don't reward readiness. They punish emotional readiness. Every trader thinks they're prepared until the volatility hits, until price candles start jumping like fireworks, until spreads widen, and the plan you had in your head suddenly disappears. You tell yourself, I've got this. I'll wait for confirmation. But when the number comes out, your screen flashes red and green, and suddenly you're no longer trading a setup. You're trading your heartbeat. That's the moment every trader forgets you don't trade the event, you trade your reaction to it. You think you're reacting to CPI, but really you're reacting to fear, to greed, to the story your mind is telling you about missing out. You tell yourself it's opportunity, but it's not. It's temptation dressed as opportunity. Every event day starts with the same emotional cocktail: hope, anxiety, and a subtle sense of pressure. It feels like this is your shot, the big trade that could change everything. That's the dangerous illusion of volatility. It doesn't just move the market, it moves you. You start thinking in outcomes, not probabilities. You start asking, what if it goes my way, instead of what's my risk if it doesn't? And right there, before the news even drops, you've already lost your edge. You see, event day risk isn't about the news release, it's not about the data. It's about the emotional volatility inside you. The real risk isn't on the chart, it's in your nervous system. That surge of dopamine when you imagine catching the perfect move. The flush of cortisol when price spikes against you. The silent tension in your jaw as you wait for the next candle. These aren't just feelings, they're physiological responses. And every one of them pulls you further away from logic. The reason traders blow up on event days isn't bad analysis. It's overconfidence. It's impatience. It's the silent belief that this time will be different. But here's the truth. If you can't manage your emotions on a normal day, the event day will expose every weakness you have. Markets are mirrors, and volatility is the most honest mirror of all. It shows you your fear, your greed, and your lack of control. You might think, but I can handle it. Maybe you've been profitable lately. Maybe you've had a streak. You think your system can survive anything, but the market doesn't care about your streak. It doesn't care about your setup, your confidence, or your expectations. On event days, the market is chaos, and chaos doesn't reward ego. It rewards patience, clarity, and humility. There's a reason professional traders lower their exposure during high-impact events. It's not because they're scared. It's because they understand risk is not just price-based, it's psychological. When volatility spikes, your brain switches from analytical to emotional mode. Fight, flight, or freeze, that's not trading, that's survival. And survival mode has one goal: protect the ego, not the account. Think about that. How many times have you stayed in a losing position because closing it would mean admitting you were wrong? How many times have you doubled down because you couldn't stand the idea of missing the rebound? That's not your strategy failing. That's your identity being threatened. You built your self-worth around being right. So when the market challenges that, you don't respond rationally. You defend emotionally. Every time you do that, you drift further from being a trader and closer to being a gambler with a chart. You start believing that conviction equals control, that confidence equals clarity. But in truth, conviction without control is the fastest path to destruction. Event day risk is a test, not of your technical skill, but of your emotional discipline. It asks one simple question: can you sit in uncertainty without trying to control it? Because that's what trading really is, a constant exposure to uncertainty. And your ability to remain centered in that chaos determines everything. You might think you're trading the CPI numbers. You might think you're reacting to Powell's speech, but look closer. You're trading your impulses. You're trading your emotions. You're trading your inability to wait. There's a quote that says the market will always test your patience before it rewards your discipline. And nowhere is that truer than on event days. Most traders don't lose because they took the wrong side. They lose because they traded too soon, too big, too emotionally. They let the noise outside amplify the noise inside. In reality, the event isn't the danger, you are. Your lack of patience, your attachment to being right, your inability to detach from the outcome. You can't control CPI. You can't control the Fed, but you can control yourself. And that's where real risk management begins. So before the next big event, ask yourself one question: do I have a trade plan or do I have a hope plan? Because only one of those survives volatility. It always starts the same way. The hours before the event feel longer than usual. Every candle, every tweet, every rumor seems important. You tell yourself you're calm, but you're not. You're waiting for certainty in a game built on uncertainty. You keep refreshing the calendar: CPI in 3 hours, then 2, then 15 minutes, and the silence starts to get heavy. That's the part most traders underestimate: the waiting. The human mind hates uncertainty. It would rather have a bad outcome now than sit in the tension of not knowing. So what do? You start trying to predict. You scroll through projections. You replay old events in your head. You convince yourself you can anticipate the reaction. But that's not analysis. That's anxiety dressed as logic. Every thought is a negotiation with fear. Fear of missing out. Fear of being wrong. Fear of watching others win while you do nothing. That's why the pre-event hours are dangerous. Not because of volatility, but because of mental noise. The market hasn't moved yet, but your emotions already have. You start building narratives. If CPI is higher, I'll short immediately. If it's lower, I'll buy the breakout. If the Fed sounds dovish, I'll catch the trend early. But deep down, those aren't plans. They're reactions waiting to happen. And the market knows it, because it's not just numbers being released, it's millions of emotional reactions colliding at the same second. The truth is, most traders lose before the event even begins, not because they lack skill, but because they lose emotional neutrality. They pick a side. They form an opinion. And when the data comes out, their ego demands to be right. That's how overconfidence sneaks in, not through greed, but through attachment. You attach your identity to your prediction. And when the market proves you wrong, you don't cut the trade, you fight it. Because now losing money isn't the worst part. Losing certainty is. This is where the psychology gets deep. Every trader wants control. We crave it because markets constantly remind us how little of it we actually have. You can't control inflation. You can't control Jerome Powell. You can't control the algos or the liquidity sweep, but you can control your exposure. You can control your reaction. You can control your willingness to sit in discomfort. That's the real edge, not predicting the number, but managing your nervous system when it hits. The professionals understand this. That's why they prepare emotionally, not just technically. They plan their risk before they plan their trade. They write it down. They know the worst case scenario. They define what enough looks like. Because when the chaos comes, you won't have time to think. You'll act purely on instinct, and your instinct will follow your preparation. So if your preparation is emotional, your reaction will be emotional. If your preparation is disciplined, your reaction will be disciplined. That's how you build psychological capital. Psychological capital, the most underrated currency in trading. It's what allows you to keep showing up after losses, after mistakes, after chaos. It's what separates the traders who survive from the ones who blow up after one bad day. And you build it by practicing control when everyone else is losing it. Before every major event, you need to ask yourself one simple question. What am I willing to lose emotionally today, not financially, emotionally? Because that's what really drains you. It's not the red numbers. It's the shame, the anger, the self-blame that follows. If you can define your emotional limit before the chaos begins, you give yourself a boundary, a line that says, beyond this point, I don't chase. That's emotional risk management. Trading isn't a battle between bulls and bears. It's a battle between your discipline and your impulses. And on event days, your impulses are armed and dangerous. They whisper just one trade. They say it'll move fast, don't miss it. They convince you that doing something is better than doing nothing. But real traders know doing nothing is a position. The hardest skill in trading is learning to sit through discomfort without reacting to it. Because discomfort is not danger, it's data. It tells you where your emotional limits are. It tells you when your ego is louder than your system. And the more you can stay still in those moments, the more control you reclaim. You don't conquer fear by fighting it. You conquer fear by understanding it. You realize that fear isn't your enemy, it's information. It tells you where you're overexposed, where you're uncertain, where you're trying to control things that can't be controlled. When you learn to read fear the way you read a chart, you stop reacting and start responding. That's the transition every trader must make. From reactive to responsive, from emotional to intentional. Because the goal is not to eliminate emotion, it's to manage it with awareness. You can't trade like a machine, you're human. And that's not a weakness, it's a strength if you understand it. Your awareness of emotion is what allows you to anticipate your own behavior before it sabotages your trade. That's mastery. So when the clock ticks closer, when the candles tighten, when the air feels heavy, remember this. You're not preparing for CPI, you're preparing for yourself. Because in the end, the only event that truly matters is the one happening inside your mind. And then it happens. The clock hits 8:30. The numbers drop. For half a second, the world goes silent. Then chaos. Candles explode in both directions. The spread widens. Your platform freezes for a heartbeat too long. And in that instant, every ounce of discipline you thought you had is gone. Your breathing quickens. Your mouse hovers. Your brain screams, do something. So you click. Not because it's the right trade. Not because it fits your plan. You click because you can't stand the silence anymore. That's how it always starts. Not with greed, not with recklessness, but with discomfort. The need to act to regain a sense of control in a situation that feels uncontrollable. You enter the market, and for a brief second, you feel alive again. But then price moves against you, fast, violently, and you freeze. Your logical brain is gone. Now it's just instinct survival mode. The prefrontal cortex, the part that makes decisions, has been hijacked by adrenaline and cortisol. You're no longer a trader. You're a human animal trapped in a fight or flight loop. Every tick feels personal. Every move feels like a judgment of your worth. The chart doesn't show price anymore. It shows pain. And pain demands relief. So you do what every emotional trader does, you try to fix it. You add size. You average down. You chase. You revenge. You do everything except the one thing that would save you stopping. This is the hidden danger of event day trading. It's not the volatility that kills you. It's the illusion that you can fight it. You start believing that if you just manage one more entry, one more scalp, one more attempt, you'll get it back. But what you're really trying to get back is not your money. It's your emotional equilibrium. You're chasing calm. You're chasing control. And the more you chase it, the further it runs. Every tick against you triggers another emotional layer. Denial, anger, bargaining, despair. You go through the 5 stages of grief in a single 5-minute candle. And deep down, you know what's happening. You can feel the loss of control, but you can't stop. Because stopping means facing what you've become in that moment, a trader completely possessed by emotion. You're no longer reacting to the market. You're reacting to your own reaction. The screen becomes a mirror. Every flash of red reflects your frustration back at you. Every green tick feeds false hope. It's not trading anymore. It's emotional roulette. And yet you stay, because walking away feels like surrender. But here's the paradox: surrender is the only path to freedom. True discipline isn't forcing control. It's releasing the illusion of control. The professionals know this. That's why when the chaos hits, they often do nothing. They watch. They breathe. They let the market burn itself out. They don't need to prove anything because they've already accepted that control in trading is an illusion. Think about it. Every trade you place is an acceptance of uncertainty. But during events, your ego forgets that truth. You start believing that prediction equals power, that speed equals skill, that reacting equals control. But all of those are lies, because the market doesn't reward speed. It rewards stillness. It rewards the trader who can watch the chaos and feel nothing. Imagine this. You see the candle spike. You see traders flooding in. You feel your pulse rising. But instead of reacting, you lean back. You watch. You breathe. You remind yourself, I don't need to catch this. I just need to survive it. That one sentence is the difference between a blown account and a long career. Event day mastery isn't about reading the data. It's about reading yourself. How fast does your heart beat when volatility hits? How long before impatience takes over? How much discomfort can you tolerate before you need to act? That's your real edge, not your indicator, not your system, your self-awareness. When you understand your emotional thresholds, you no longer get swept away by chaos. You observe it like a storm outside your window. You respect its power, but you don't try to stop it. You know it will pass. That's what professionals do. They let volatility exhaust itself. And when the noise fades, they enter calm, deliberate, clear. Because by then, the amateurs are already gone. That's the irony of event day trading. The best trades don't happen during the event. They happen after the chaos, after the panic has burned out, after the emotions have cooled, after the market has chosen its direction. But to be there, you need patience. You need discipline. You need emotional endurance, and that's built long before the event. Every impulsive trade you resist is a repetition of discipline. Every chaotic moment you observe without reacting is a rep in the mental gym. You're training your nervous system to stay stable in instability. That's the true skill of a trader, not predicting but persisting. So when the next event comes, remember this moment: the noise, the chaos, the adrenaline. Remember how easy it is to lose yourself. And remember how powerful it feels to stay still. Because in trading, the calm mind is the sharpest weapon. When the storm finally ends, the silence feels heavier than the chaos ever did. Your screen stops moving, the candles slow, the volume fades, and all that's left is you. You stare at the numbers. The loss feels unreal, like it happened to someone else. Your body is still tense, but your mind is numb. That's what emotional fatigue feels like. It's not just financial loss, it's the psychological crash that follows adrenaline. Your brain has been in combat for hours, and now the fight is over, but you can't rest because a different voice starts whispering, "You can fix this. You just need one more trade." That's the beginning of revenge mode. It doesn't start with anger. It starts with pain. The pain of regret, the pain of self-judgment, the pain of seeing what you've done and wanting to undo it. But markets don't offer redemption. They offer probability. And when emotion tries to chase probability, it always loses. You open the chart again. You look for an entry that isn't really there. You tell yourself you see structure, but what you really see is hope. Hope that you can erase what just happened. Hope that one good trade can rewrite a bad story. But that's not how it works. The market doesn't heal you. It exposes you. Every impulsive click is a confession of pain. This is the darkest part of the trading cycle, not the loss itself, but the emotional spiral that follows it. You don't want to admit defeat, so you hide behind action. You trade to escape the feeling of failure. You double size to silence the shame. You stay glued to the screen, not because opportunity is there, but because you're afraid of being alone with your thoughts. That's the real addiction in trading, not to money, but to relief. Every trade becomes a temporary escape from the discomfort of uncertainty, from the weight of mistakes, from the echo of if only. And the deeper you chase that relief, the more you lose the ability to pause. At some point, the exhaustion hits. You close the chart, you walk away, and the guilt floods in. You replay every moment in your head, the early entry, the second attempt, the moment you knew you should have stopped but didn't. You tell yourself you'll never do it again, but unless you understand why you did it, you will. Because this isn't about strategy, it's about identity. Loss threatens the trader's sense of self. It whispers, maybe you're not who you thought you were. Maybe you're not a winner. And when that belief cracks, the ego goes to war. You start defending yourself not by accepting the loss, but by trying to undo it. That's why revenge trading is so seductive. It's not logical, it's emotional self-protection. You're not trying to make money. You're trying to make peace. But peace doesn't come from control. It comes from acceptance. Acceptance that losses are feedback, not failure. Acceptance that pain is part of process. Acceptance that discipline sometimes means doing nothing, even when every cell in your body wants to act. This is the moment professional traders separate from the rest. They don't seek revenge. They seek reflection. They pull out the journal. They write what happened, not the price levels, but the emotions. What did I feel before the trade? What triggered my impulse? What story was I telling myself in the heat of chaos? They turn pain into data and data into growth, because every emotional breakdown is an opportunity for awareness. You can't build emotional mastery in theory. You build it in moments like this, when you're tired, when you've lost, when your confidence is bleeding. That's when real discipline is forged in recovery, not reaction. The pros know you don't rebuild by trading more. You rebuild by resetting. Step 1, stop completely. Close the charts. Detach from the noise. Step 2, breathe. Reconnect with the body. Remind yourself that you're safe, that a red number on a screen doesn't define your worth. Step 3, reflect. Ask what emotion truly drove you. Fear, ego, desperation. Because the moment you name it, you take its power away. Emotional mastery is self-awareness in motion. It's the ability to see your own pattern while you're inside it. It's not perfection, it's recognition. And recognition is the first step toward freedom. When you can look at your own mistakes without shame, you break the cycle. You stop needing to be right. You stop needing to win back what was lost. You start trading from clarity instead of chaos. And that's the real comeback, not a single trade that fixes everything, but a mindset that no longer needs a. Here's the paradox most traders never understand. The more you chase emotional recovery through trading, the longer recovery takes. The more you pause, the faster you heal. Because clarity grows in silence, not in screens. So let yourself step away. Let the market breathe without you. It will still be there tomorrow. But you'll be different, wiser, calmer, more aware. Because the real victory after an event day isn't getting your money back, it's getting yourself back. The next morning always feels different. The charts look calm again as if nothing ever happened. But inside, something has changed. You've seen what the market can do to your emotions. You've seen what you can do to yourself. And now you face a choice. You can either run from that truth or learn from it. That's where growth begins, in the quiet, uncomfortable honesty of reflection. Most traders rush to get back in the game. They tell themselves they've learned the lesson, but what they really want is to feel normal again. But you can't return to normal until you redefine what normal means. If your normal used to be reactive, impulsive, emotional, then maybe you don't want to go back. Maybe it's time to build something new. Rebuilding after an emotional crash isn't about confidence. It's about clarity. Confidence is fragile. It depends on outcomes, but clarity is grounded in process. When you rebuild with clarity, you no longer need the market to make you feel good. You simply show up with awareness. You stop asking, will I win, and start asking, am I aligned? The first step in recovery is acceptance without judgment. You don't need to justify what happened. You don't need to punish yourself. You just need to see it clearly, completely, without distortion. Write it down. Every thought, every impulse, every feeling. Describe what triggered you, what story your mind created, and how your body reacted. That's how you transform chaos into insight, because emotion that is observed no longer controls you. The second step is forgiveness, not the shallow kind that says it's okay. The deep kind, the one that understands you, were never broken. You were simply human in an environment designed to test every human weakness. Trading doesn't expose your flaws. It reveals your patterns. And once you see your pattern, you can begin to rewrite it. That's when the rebuilding begins. Start small, not in profit, but in discipline. A smaller position size, a tighter focus, a shorter session. Your goal isn't to win big again. Your goal is to rebuild trust. Trust in your process. Trust in your patience. Trust in your ability to stay calm under uncertainty. Professional traders don't measure progress by P&L. They measure it by self-control. Every time you follow your rules, even when it's boring, you're winning. Every time you walk away from a setup that doesn't align with your plan, you're growing stronger. Because mastery is built in the moments no one sees, the quiet choices that protect your discipline. Soon you start noticing something. You're less reactive, less emotional, less attached to being right. You begin to see patterns in your own behavior the same way you see patterns on the chart. And when you can observe yourself as clearly as you observe price, you become unstoppable. That's when you create rituals, pre-commitment habits that anchor your mind before volatility can shake it. Every pro has them. Some journal, Some meditate, some simply breathe before every trade. It's not about superstition, it's about preparation. Because if you don't program your mind intentionally, the market will program it for you. Before every major event, CPI FOMC non-farm, take 5 minutes to slow down. Ask yourself 3 questions. What am I feeling right now? 2. What's my true intention in this session? What am I willing to lose emotionally and financially today? Then write the answers down. When volatility hits, you won't have time to think, but you'll have an anchor, a reminder of the mindset you chose before emotion could hijack it. That's what separates amateurs from professionals. The amateur reacts to the event. The professional prepares for themselves, because risk management isn't just stops and targets. It's managing the emotional drawdown before it becomes financial. Here's the truth most never realize. The greatest risk in trading isn't losing money, it's losing presence. Once you lose presence, you lose awareness. And when awareness is gone, discipline follows. Presence is the ultimate stop loss. It's what keeps you centered in the storm. So build your process around presence. Before the charts, before the trades, come back to yourself. Breathe. Feel your pulse slow down. Ground your attention. Only then open the platform. Because your state of mind is your first position of the day. Over time, you'll note something extraordinary. The same events that once terrified you will start to feel neutral. CPI, FOMC, jobs data. They'll no longer feel like threats. They'll just be information, because you'll have separated the market's reaction from your own reaction. And that's when you truly become a trader, not someone chasing the market, but someone mastering themselves within it. The market will always test you. It will test your patience, your beliefs, your identity. It will push you to the edge of emotion just to see what you do next. But every test carries a gift, the chance to evolve. If you can see every loss as feedback, every frustration as data, every moment of fear as an invitation to awareness, then you never really lose. You learn faster. You suffer less. You trade better. And one day, you'll look back on all those chaotic event days and you'll realize they were never obstacles. They were training. Training your emotions. Training your patience. Training your mind. You'll smile because the market didn't break you. It built you. In the end, event day risk was never about CPI or FOMC. It was about you, your ability to stay grounded in uncertainty, your willingness to detach from outcomes, your courage to face your own mind and not run from it. That's the ultimate mastery, not conquering the market, but mastering the self. Because when your mind is calm, no event can shake you. And when your discipline is unshakable, the market stops being a threat and becomes your reflection. When the charts fade to silence and the screens go dark, what remains is not your balance. It's your awareness. The awareness of how the market tested you and what it revealed. You faced fear. You felt chaos, and still you stayed. Not to fight it, but to understand it. That's what separates traders from the crowd. Not intelligence, but consciousness. The ability to stand inside uncertainty and still breathe. The market will keep testing you. CPI, FOMC, jobs. Each event will bring a new storm. But now you know the truth control was never out there. It was always within. This is mind over markets, where the charts end and the mind begins. If you found value in this reflection, share it with someone still fighting the chaos. And remember, you can't master trading until you master yourself. Would you like me to also write a YouTube video description, plus SEO optimized title and thumbnail text to match this tone and help the video perform better in search? It can include strategic keywords like CPI trading psychology, FOMC, risk management, and emotional control in trading.